Okay, thank you everybody for being here tonight. Tonight our main speaker is Gwen Hallsmith. Gwen is with the Institute for Public Banking, and she's going to speak to us tonight about the advantages a state bank would have for the state of Washington. You know, like the state of North Dakota has been so successful doing since 1919. And there's a lot of needs in this state, a lot of unfunded projects, and this could be really what we need. Not only that, but also be a good way to maybe take a step away from the system that's proven to not work very well. You know, like I tend to be a libertarian in my views, and I believe in free market solutions as opposed to public solutions. But currently, I mean, what we have now is really not free market. It's crony capitalism. So don't make the distinction that the free market is the same as crony capitalism. They're two different things. So how do you keep that from happening? And I think what's always been successful in the past, it helped Japan and Germany after the wars, was going to public banking. And we're in a crisis now. You know, we haven't gone through a war yet, but we are in a crisis in this country, an economic crisis. A lot of needs that are there are going unmet. So this could be a good solution. So pay attention, say your questions till the end, and then we'll do a Q&A. So we're going to have John Wake from the, let's see, Merlin store. From a progressive point of view, talk to you guys about coming together, because this isn't a Republican problem or a Democrat problem, a libertarian or progressive problem. It's an American problem. So we need to be open-minded on all that. And John's been a friend of mine for going back several years now. I really respect him. So he'll speak for a few minutes. Also tonight, Robin Corner of Blue Republicans speaking about the need to work together from the grassroots level. And then Gwen will speak, and then we'll do a Q&A for about 30 minutes. So anyway, here's John Wade.
Thank you, Rob. I really appreciate you putting it together and letting me be part of it. Known Rob a long time, and we've always both kind of been on the fringes of the politics, and I really appreciate that. And I was really excited to hear that Gwen's coming tonight to talk about state banks, and the state banks in North Dakota. And you said, I think they started in 1919 by a group called the Nonpartisan League. And if you don't know me, we stole that idea and had a nice little group called the Nonpartisan League for a few years downtown and met and tried to kind of solve issues in a nonpartisan fashion. It's easy to find the things that separate us in life, and politicians and politics tend to work really hard to kind of keep us across the aisles. I actually prefer to find the things that unite us. And I think state banking is one of those things that really can unite us in a couple different ways. Most of us, I'll go out on a limb and say that most of us aren't thrilled with what Wall Street has done to America in the past few years. And I think it's a very nonpartisan thing to look for solutions to what the banks have done. I'm big on local solutions. As the world gets more complicated and finances and things get messier, and they seem to be on a national level, I think some of the solutions to our problems are going to be at a local level. And the state banks and the governments of the state putting their resources into the state banks and then having those resources go back to our local communities is going to solve a lot of problems. So anyway, I'm glad you're all here, and I'm really excited to have hear what Gwen has to say and what you guys have to say as far as questions on it. So thank you, Rob.
Thank you. So I think the two gentlemen before me have basically stolen my gist. So yes, Blue Republican is also a non-partisan. Oh, I'm sorry. Yes. I want to get a good look at this. Right?
Yes, we don't want to miss
a non-partisan group, and I love the spirit of this. Isn't it wonderful? I mean, there's a delicious irony. Rob, a libertarian, who's run for office as a libertarian, becomes the first Republican treasurer in this community since 1956, taking me from a Democrat. See how the party? I think there's some symbolic of what we're about. There is a phrase that money is the root of all evil, right? Obviously wrong. The money that I have, and it's not enough, I love it. I think money's a great thing, but the corruption of money, I think, is perhaps the root of all evil. Because it seems to me that progressives maybe who are concerned with social justice, libertarians who are concerned with the ease with which the state takes down our rights and our civil liberties, conservatives who perhaps are concerned about the growth of government and, again, the rights that the government exercises for us, always in our own interest, of course. All of these abuses, from wherever you stand on the political spectrum, they all seem to go back or go down at root to the monetary system. And I'm not an expert on public banking, but I do lecture on monetary theory and the monetary system all around the world, and I love giving the lectures that I give on this topic because, and I usually am talking to young adults, and you can see the audiences as I talk about the kind of the absurdity of the monetary system that we have, the inherent corruption, if you like, that's built into the nature of money. As I kind of explain it, you see the faces changing, and they kind of go through these stages of grief. You know, denial, this can't be so. And then they ask these questions that naturally arise. Well, if what you're saying is true, Robin, then surely X, Y, and Z. And by the end of it, they've gone through this gestalt switch, and the whole world looks different. Our monetary system, well, perhaps this is a microcosm of a change that's happening more broadly in the United States, right? We know that people who are registering independent, they constitute the fastest growing self-identified political group now, those that are emptying out of the Republican Party and the Democratic Party. There is a kind of a zeitgeist thing going on. The message that socializing losses and whilst privatizing profits is offensive to American values will resonate to people who self-identify anywhere on the political spectrum, and so it should. So I hope that now is a good time for us to be discussing this. And by the way, also in the spirit of what's being said, one of the problems that we have, one of the problems that underlies the partisanship that I think allow the powers that be to get away with what they do to us is our divisive use of vocabulary wherever we sit on the political spectrum, right? So here's the topic: public banking, right? So if you're on the left, you're not going to like it because it's got banking in it. If you're on the right, you're not going to like it because it's got public in it, right? And this is kind of the attitude that people bring to politics. It's changing, and I think all of us here are here because we want to change. But you know, these are kind of these red flags, right? These symbolic words. In the sense that we usually use the terms public and banking, I might say that public banking is a bit of a misnomer, actually. It's perhaps not the most helpful marketing, most helpful name. I mean, it's descriptive, but it might maybe not the most helpful name for marketing this idea. But all of that said, well, I should say, therefore, keep an open mind when listening to this. I come from more of the classical liberal tradition. We've just had dinner. Gwen self-identifies as a progressive with strong green tendencies. Our Republican treasurer over here self-identifies libertarian. But here we all are, because as I say, whatever most offends you, whether it's the takedown of civil liberties, whether it's an abusive growth of government, and whether it's economic and social injustice, all of those things are related. And perhaps they're related no more strongly than in the area of the monetary system. So I think this is fantastic. So thank you for being here, Gwen. Thank you, Rob, for arranging this, and thank you all for coming. And I think I'm going to learn a lot from you.
Okay, and quickly, thank you, Robin. And quickly, before I bring Gwen on, you know, the Public Banking Institute is a non-profit, and it's difficult to raise money because they do have to continue their 501c3. If you have the word bank in your name, I mean, who wants to give to a bank? Well, it's an Institute for Public Banking. So, you know, we'll have like a can here on your way out. If you think this has been value for, you know, drop a check or some money in there, that helps you to keep going. So, without further ado, here's Gwen Hallsmith.
Great to be here. I have to say though, in my time, it's quite late. It's after 10 at night. I left Vermont at 5 this morning. I beat the snowstorm out and actually made it here. By the time I get back, I understand there will be about 2 more feet of snow on my front yard, so I'm looking forward to skiing this weekend. So I have to start with an apology. My computer is frozen, and I do not believe I'm going to be able to get PowerPoint to work. But many talks were given before PowerPoints, and I'd really rather engage with all of you anyway than with the slides on the screen, so forgive me for that. I think my computer, that's for the tape, the computer is feeling the effects of jet lag. So public banking, as Robin said, the word itself evokes puzzled looks at first. One morning I was talking to the Rotary Club at breakfast in the Mad River Valley, and I was called a communist and a socialist before breakfast for using the same words in the same sentence, public and banking. But once I finished the talk and explained what we meant, the man who did that came up to me and he said, I get it now. This is what we have to do. So that was encouraging. I hope you end the evening with that same feeling. I came to public banking because of my deep commitment to sustainability over the long run. As Rob said, I'm a green progressive type, and I've been working on community sustainability and environmental issues for a long time. And after lots of investigation and work, I discovered that, as he said, money is the root of a lot of the problems that we face in the environment, actually, the way money is structured and the indebtedness in our society. And that led me to write a book called Creating Wealth, which I have a copy of here, which is all about the problems with the monetary system and how we can address some of those problems through the establishment of complementary currencies. And it's through that work that I learned about public banking. And public banking is a great way to start to democratize a system that right now is privatized, privately controlled, and is doing nothing less than impoverishing humanity and destroying the planet. But besides that, it's a great system for the few people that benefit from it. So I want to start with where we are now. What happens now in our banking system with respect to our public sector? Because when I'm talking about public banking from the point of view of the Public Banking Institute, we are actually talking about a specific type of public banking, not the entire universe. So tomorrow I'll be meeting with the City Council in Seattle and talking to them about it because they're interested in starting a public bank for the city. Now in Germany, they have lots of public banks at the community level, and if we had one in this area, all of you would have an account there. That's not what I'm talking about, actually. What I'm talking about is the kind of public bank where the cities and state would have an account there, but not necessarily individuals or businesses. So right now, what happens with your city and state deposits, this is the money that you send them in taxes, the money the federal government sends them in grants and intergovernmental transfers, all of that is put in a bank. And then the city uses their bank account just like you and I do to pay their bills. Meanwhile, the cities and counties and states also do quite a lot of lending. I know I used to work for the city of Montpelier in Vermont, and I ran the community development finance agency the city ran. So if businesses were in trouble, they would come to the city and ask for a loan, and I had a revolving loan fund that I would make available to them if they qualified. Homeowners would come to the city if they needed a loan and they couldn't afford or couldn't get a loan from a bank. And again, I put them through some paces and some due diligence, and then the city would make that loan. The states make loans. Cities borrow money to build infrastructure. There's a lot of lending going on in the public sector, basically. And what we do is we put our money on deposit in the banks, and then we borrow it back when we need it. We borrow it back for infrastructure, we borrow it back for student lending, we borrow it back for housing lending and business lending. So the banks get our money to do what they will with it on deposit, and then we have to borrow it back for our public purposes. The kind of public banking I'm talking about short circuits that process, where the state or the city would put their money on deposit in a bank owned and controlled by the state and the city, and they would use that money in much the same way that a bank does for lending to produce the return that they expect on their deposits. We're doing that in Vermont now, even though we haven't gone the next step of getting a bank license assigned to the state, and thereby allowing them to use the fractional reserve system that the banks use. So we're doing agency lending for the treasurer's deposits already based on the public banking initiatives that we've taken there over the last few years. So what's the difference between this type of publicly owned bank and a regular bank? Does anybody have any ideas? Well, one difference is their mission. What do you suppose the mission of a regular bank is?
Money.
Making money. Exactly right. They're a business. They're making profit. That's their mission. Nothing wrong with it, but that's what they're there to do, to make money for their private shareholders and their bank owners. The mission of a public bank is to serve the public. So in North Dakota, where they've had a public bank since 1919, their mission is economic development, education, housing, business growth, and agriculture. It was the farmers that set the bank up in the first place. They got tired of the New York City bankers showing up every time they had a bad crop and foreclosing on all their farms. And that's what led them to pull together the nonpartisan league and set up the North Dakota Bank. The banks fought it all the way to the Supreme Court and lost. And it didn't succeed, actually, very well until the local banks, the community banks in North Dakota, finally figured out that it would be to their benefit to support this public bank and to partner with it to do the kind of lending that they did. And that's exactly what happened. The banks bought the bonds that the state bank floated to provide its capital base, and they've been in partnership ever since. The state bank puts its deposits into the Bank of North Dakota, and then it partners with the state chartered community banks to do the lending. They've been doing a great job. Over the last 10 years, the Bank of North Dakota has paid a dividend to the general fund of the state of over $300 million. And this isn't just because of the oil and gas fracking that's going on there. In fact, very few of their loans are directly loans to oil and gas companies. Goodness knows they have enough capital and profit that they don't always go looking for loans to build their companies. Most of their loans actually are student loans. Businesses come second, followed by residential loans and agricultural loans. So they're a diversified loan portfolio, just like you'd expect a public bank to have, and they've been very, very profitable. It's another revenue stream for the state, so much so that the state has been having a debate about whether to eliminate the property tax. That'd be a nice debate to have. I'd like to have it in Vermont. Meanwhile, at the public level, we're told there's only two choices. We either have to raise taxes or cut spending. And depending on which side of the aisle you're on, you prefer raising taxes or cutting spending. But meanwhile, those are false choices if what we're doing is paying lots and lots of money to the private banks that we borrow for building infrastructure and we borrow for doing state business. It is a huge, huge cost to our public sector to do all this borrowing. I had a friend, Margaret Kennedy, who did a study of it and showed that on average, in housing projects that the state helps fund, 77% of the money spent on the project goes to interest payments. San Francisco and Oakland are building a new bridge across the bay. It costs, just say, $2 billion. Another $2 billion are going to be spent on interest payments on their bonds. So it's like an invisible tax on everything we buy. Not just public infrastructure and public purposes, but even the private products. About 40% of all the cost of the private products that you buy every day, your groceries, your hardware, your cars, goes to pay the financial sector interest on the lending that they do to bring those products into existence. It is the biggest invisible tax that we pay, and that hidden tax basically has the effect of taking our wealth and transferring it up to the people that have the stock in the banking and financial sector. The meme that we heard so much about a few years ago with the Occupy movement of the 1% comes directly from this type of monetary system that we use. It is a direct side effect of the system. And it's not because the people in charge are particularly greedy. It's the way the system is structured. It's actually the way it's built, is to concentrate wealth in the hands of fewer and fewer people and extract it from the rest of us and from nature. So that's how it works, and that's why it works, and it's an enormous cost. So getting back to the way it is now, the mission of the bank is different. The ownership of the bank is different. Private banks are owned by their shareholders. Public banks are owned by the public. That's you and me and everybody else here in Washington State, if you set up a state bank, or everybody in the city of Seattle, if you set up a city bank. Who gets the profits of the activity of the bank? That's another question that you ask if you're looking at the differences between the two. In a public bank, the profits go to the public. In a private bank, the profits go to the private shareholders. So those are the differences. And the kind of public banks we're talking about, as I said, you would not have an accountant. You would not go there and have an account. It wouldn't be where your checking account is. It wouldn't be where your business's checking account is. But your state's checking account would be there, and maybe your municipal checking account would be there. Now, what's different about municipal deposits and state deposits? Anybody, what's the difference between the money you have in the bank and the money that your state or municipality has in the bank? Anybody? Yeah.
Well, the money that like a city or a county would have, it would be a municipal corporation. So that's like one of the things. So there's different benefits with that.
Right. They're also really big. The average daily balance in the little state of Vermont, we only have 600,000 people. We're like North Dakota in terms of population size, is over $350 million a day. That's the average daily balance in our bank account as a state. Now, who can tell me what the limit of FDIC insurance is?
200.
Used to be 100, now it's up to 250. So FDIC is insuring deposits up to $250. Does that mean that a $350 million deposit is going to be insured by the FDIC? No, not even close. It's orders of magnitude bigger than the FDIC insures. So how does the banks insure those deposits? Do you think our state and local treasurers like the fact that they have uninsured deposits in the bank?
We can go to the bank and get them to pledge assets.
Exactly. That's right. The banks have to pledge capital or pledge their assets to capitalize these deposits. That means that if you're going to be insuring a $350 million deposit, you have to pledge that much in capital. Now, you suppose your local bank on the corner that's chartered in the state of Washington has that kind of capital? Probably not. Some of them might. Some of them might. And sometimes states and municipalities divide up their deposits. So they go to a variety of different banks to keep them, in the local community. But for the most part, these big municipal and state deposits right now are going where?
Wall Street Bank.
Wall Street. The big national chartered banks, because they're the ones that are big enough to capitalize the deposits. Now, there's been an interesting thing that's happened since 2008 in this bank capital world, for those of us that follow it. What do you suppose is going to happen the next time we get a massive meltdown like we had in 2008? Anybody know?
Well, it depends on how quickly the Federal Reserve contracts the money supply.
That's one way it might be addressed, but the Bank of International Settlements, which is like the mothership of all the central banks in the world, based in Basel, Switzerland. I've actually been there to see it. It looks like something out of 2001, A Space Odyssey. Remember that big thing that they found there? That's what it looks like, a monolith. That's what it looks like in Basel. They've come out with some new rules around how banks are capitalized. And the new rules state basically that in the event of another major bank meltdown like we had in 2008, the people who are first in line for the bank assets are derivatives holders and repurchase agreement holders. Now, who are the ones that tend to own the derivatives and repurchase agreements? The banks, exactly right. I mean, and this is what the central banks are there for. They're there to preserve the banking system, and that kind of system preserves it admirably. But derivatives market right now is in the quadrillion dollars. It's like 5 quadrillion, yeah?
Well, I mean, couldn't you, from what you're sharing here, I sort of see, I mean, I want to see if you see like a similar thing, like the Great Train Robbery, only like on a global, like every nation scale, but like everybody's like savings and everything they built up in their lives in terms of savings and like investments is going to like disappear.
Well, let's not forget that for those of us who tend to keep our deposits under $250,000, not like me, I haven't gone over that yet. I don't know about the rest of you. You know, there is the FDIC insurance. And the FDIC right now is about $75 billion in its bank account to bail out banks and hopefully protect some of our deposits. But the derivatives exposure that the banks have is in the quadrillions, $5 quadrillion last time I checked, last month. So if they're the ones that have first dibs on the bank's capital, and they're the ones that are first in line with failures, what happens to our public deposits? That's the problem. The public deposits. So we're not going to be bailing them out like we did the last time with taxpayer dollars at the end of the game. We're going to be bailing them out with our state, city, municipal, county bank accounts. And if you don't believe me, just look what happened in Cyprus. Now, we didn't cry too many crocodile tears about the people that lost their bank accounts, and they call it a haircut. I don't know about you, that's kind of an interesting term for theft, as far as I'm concerned, you know, just taking your money and using it to capitalize the bank, because that's what they're doing. Because most of the people in Cyprus that had these accounts were the Russian and Ukrainian migrants, right? I mean, so we didn't feel too sorry for them, but we're going to feel really sorry for them when it's our public deposits. So one of the really good things about public banking is that it sets up a system that gets our public money out of the global gambling casino known as the international banking system right now. If you haven't read Flash Boys, anybody heard of that book? I highly recommend it. It's a great book. Flash Boys. It's about high-frequency trading, which is the latest iteration of how the banks are taking our money and moving it in very interesting ways and profiting at our expense. But so public banks basically help ensure the safety of our public monies and provide a lot more lending for our local economies than we are able to mobilize now. And this is proven out just by looking at the difference between Vermont, where I'm from, and the state of North Dakota. We both are very comparable in terms of our population, in terms of the general fund budget that we have, in terms of all of the different things that come with running a state for about 600,000 people. Now, it's true, we don't have large oil and gas deposits in Vermont, and if we did, we outlawed fracking there last year, so even if we have them, we're not going to exploit them in the same way. But in fact, everything in Vermont is pretty much the same as in North Dakota, except when you look at the economic development lending they do. And they do 10 times what Vermont does in a similar sized state. So, not surprisingly, they have a much stronger economy there than we do. Now, how do you account for that? Same size, same makeup, same taxation system, same everything except the amount of lending they're allowed to do, and it's because the state has a bank. And so their deposits can be used in the same way banks use deposits, which is the fractional reserve system, right? The great myth of Western capitalism, that you put your money in the bank and it actually is in the bank, right? Instead of being used in the community for lending. So public banks will be a huge economic benefit for people, and a safety valve for our public money and our public trust. Now, the Bank of North Dakota, as I said, has been doing this since 1919, and they've been working in partnership with their state chartered banks. And as a result, in North Dakota, you have a very healthy private banking sector. This isn't a socialist conspiracy. The banks are in favor of it, and they back it. And this is borne out by a few statistics. Like, for example, that in North Dakota, after 2008, how many banks do you suppose failed there? Anybody?
Zero.
Zero bank failures in North Dakota in the wake of 2008. Now, nationwide, after the crash, we saw a big fall off in bank lending. This is what happens. The way banks work, the economists call it pro-cyclical. As the economy starts to crash, they withdraw their lending and they withdraw their credit lines. We had a case in Montpelier, where I worked, where one of our biggest businesses in town, a cornerstone business for the city, if this business had gone under, the city's character would have changed dramatically. Very successful business, by the way. They were positively impacted by the recession because they were a higher education institution and people who were out of work went back to school. So they had no problems with the way their business model was working. It was a private institution. I'll maintain their confidentiality, but it was a very important business for Montpelier because of the way their business integrated with a lot of the smaller businesses in our community. They spun off into a lot of our smaller businesses. They had, as educational institutions, well, kind of a cyclical cash flow, though. And so they needed a credit line to help them get in between tuition payments that would come in. The credit line was capitalized with the owner's stock. And after the crash, that stock lost a lot of value. The bank pulled their credit line. There was nothing wrong with that business. There was no reason for the bank to pull back their credit line, except for the value of the owner's stock. So the city stepped in and we gave them a loan they needed to make it through that rough patch. But nonetheless, this is a pro-cyclical thing. That bank was making our local economy worse by withdrawing credit at exactly the moment it should have been extending credit. And it's just because of the bank's business model and the way the economy works with the banking system we have. It's not anybody's individual greed or avarice or bad management. It's what they need to do because of the logic of their system. Now in North Dakota, that wasn't the case. With the state bank, and this is something I could have showed you on the slide if my slides were working, you saw an increase in lending after 2008, a counter-cyclical public bank response to an economic downturn, which is possible when you're setting priorities for the public sector for economic development, education, housing, etc., instead of merely trying to earn a profit for a few shareholders. This is also true in Germany, where they have public banks. In fact, Thomas Keidel, who's the representative of the German Public Banking Association, will also be speaking in Seattle tomorrow. He's here from Germany. And I've met him before, and he's got this great story of how after 2008, in this one little town in Germany, there was a factory there that didn't have any orders coming in, none. They were literally faced with laying off their entire workforce. So they went to the Sparkasse, which is a public banking system in Germany, their local public bank, and asked for a big loan to build a new factory. Because they needed to put their workers to work. And they knew there were things that they needed to modernize about the factory. And the bank gave them a loan. Now, that wouldn't happen here in this country. It wouldn't happen. You wouldn't have zero orders coming in and be able to go to your local private bank and ask for a big loan to build a new factory. But in Germany, because the Sparkasse is precluded from lending anywhere outside of that geographic area that it serves, and because they knew this factory and had been doing business with this factory for 20 years, and because the people that run the banks are embedded in the community, they're not in a boardroom a couple states or even a country away, they gave them a loan. And sure enough, Once the new factory was built, the economy started to come out of its malaise, and they had better orders, and they were able to better fill their orders because they had this great new factory that they were able to also, by the way, pay the bank back the money that they borrowed. So that's an example of counter-cyclical lending, which is also possible with public banks. Now, sorry.
Do you have any statistics on like the difference when there's like a national recession in the United States compared with like what happens with the economy of North Dakota? Or maybe like I missed that because I came in late.
No, that's exactly right. No banks failed in North Dakota. They were able to extend more economic development loans than they had before. And what happened in North Dakota after 2008? Because of some of that counter-cyclical lending, the economy boomed. Now, some of it has to do, true enough, with the oil and gas industry there. With the oil and gas industry selling lots of oil out of the state and bringing lots of people in to work in the oil and gas field. That accounts for some of it, but not all of it. And that's another slide I have. It shows the breakdown of the portfolio of the Bank of North Dakota. The largest category is student loans, actually.
Just quickly, we'll start taking questions at about 8:15. So hold questions till.
It's okay, I really don't mind questions in a minute, sorry.
I just want to ask quickly, who's like in North Dakota, who's making the decision on what loans to make? Is it a group of people from the community or just a bank group or who is that?
This is a great question, thanks. The Bank of North Dakota is run by bankers, as are all public banks everywhere in the world. The board that helps them set the priorities includes 3 statewide elected officials, the governor, the attorney general, and one other that I always forget. They are able to set the priorities for the bank. So let's say when North Dakota decided they wanted to encourage medical students, and we're going to give medical students preferential treatment and pay back, they give them some flexibility in paying back their loans if they stayed in North Dakota to work because they were having a doctor shortage there. That's the kind of priority that the statewide officials set for the bank. But then the bankers run it like a bank. The politicians have nothing to do with who gets the loans, and it's not a corruption problem. Why do we want government running a bank? That's a question I get a lot. Well, the bankers run the bank. The government helps set the priorities, but that's all. There's a firewall between the politicians and the bankers in North Dakota.
We'll see what happens in New Jersey.
Well, yeah, some places the firewalls are just a little bit thinner and flimsier, it's true, but nonetheless, if they're run correctly, in Vermont even, the Vermont Economic Development Authority, people in that agency, even though they're only doing agency lending rather than bank lending, are bankers. They're people that have worked in banks most of their life. And that's because there's a lot of due diligence that you learn as a banker. There's a lot of risk management that you learn as a banker. That's how they run them successfully and run them so that they don't have high default rates. The default rate in North Dakota is very, very low. And interestingly enough, they have a very healthy banking sector. Nationwide right now, we've fallen to about 4 banks per 100,000 people. And that's about what we have in Vermont. Most of our small community chartered banks have gone out of business. They've been bought by the big national banks. North Dakota, they still have 12 banks per 100,000 people. So they have many more community banks that are typically owned by people in that community in much the same way as the German Sparkasse banks are owned by people in that community as a community bank. So there's a really good relationship between the Bank of North Dakota serving as kind of like a state-level Federal Reserve for these community banks and the banks themselves. They don't have the same relationship with the large federally chartered banks, and they do exist in North Dakota, but their market share is very, very small. Same in Germany. The market share of the banks in Germany and these public banks are very high, and the banks are always going after them. Thomas Keitel has all these stories about things the bankers have done to try and outrun the public banking sector in Germany. Like they forced legislation a few years ago that made the German government stop insuring these small public banks. And so, no problem. They developed their own insurance system on a cooperative basis nationwide. They don't even use government insurance anymore there, and they are very successful. They've made it through even economic crises without having a banking crisis like we have here with our large Wall Street banks. Now in Vermont, we wanted to start a public bank. We've been working on it for 4 or 5 years now, and it was in large part due to a group I pulled together after I published this book I wrote called Creating Wealth, of all the different people in the state that were interested in monetary issues. We had the people interested in public banking. We had people interested in the NEED Act, which is the national legislation to make banking quite different. 100% reserve banking run on something like the Lincoln Greenback program or the Chicago plan that came out of the Chicago school after the Big Depression, where the banking system would just change entirely. The government would issue all the money, all banking would be on a 100% reserve basis, not fractional reserve. And it's legislation that was filed by Dennis Kucinich several years ago and has exactly an ice cube's chance in you know where of getting passed. But it's still, an interesting intellectual exercise to see what happens to this legislation in Washington. So there are people that were involved in that were on board. Folks from the Occupy movement who wanted people to move their money from the big banks to the smaller credit unions and smaller banks came on board. We had senators and businessmen and lots of different people. And I personally am interested in complementary currencies, which is why I pulled everybody together. And it seemed like public banking was a really good means to changing the way money works. It's not really an end in itself, because there's a lot of different kinds of public banks, a lot of purposes they can serve, but it does fundamentally democratize the monetary system, which right now is privately controlled in this country. It was privatized back in 1913 with the Federal Reserve Act, and it hasn't fundamentally changed since then, and I think in the last 100 years we've certainly seen the ravages of its failure. I think it's time for a new banking system in this country, and democratizing it would actually be quite in keeping with the other principles that our country, at least ostensibly, runs on. So we started moving forward. We filed legislation to do a study bill of the economic impacts and feasibility of a public bank in Vermont. It was a pretty small bill, $25,000. And the banking lobbyists fought it tooth and nail. It never got passed, even though it had 65 people from our representatives, which is a big proportion of our House, signing on to the bill as it was introduced in the House. So I went out and independently raised the money from the Donella Meadows Institute to do this study. And I engaged the Donella Meadows Institute, the Gund Institute for Ecological Economics at the University of Vermont, and the Political and Economic Research Institute at the University of Massachusetts to do the study. Perry at Massachusetts actually had the model that was used. It's called the IMPLAN model, and it's an economic model that our legislature actually uses to evaluate the economic impact of various policies on the state. So it was highly credible as a testing mechanism for what a public bank would do in Vermont. And we came up with the results that showed that with a public bank of the type I've described, where just the state, not all the municipalities in Vermont, just the state puts its own deposits in its own bank and uses those deposits for the lending that the state does, both for its own infrastructure, job creation, housing, student loans, would create over 2,500 jobs and add over $350 million to the gross state product in Vermont. Now that's significant. We're a small state. 2,500 jobs represents over 15% of our unemployment rate. That's a lot. $340 million in gross state product in a state the size of Vermont is also a substantial positive economic impact. Now, if we could depend on the legislators to actually use data in their decision making, that would be a no-brainer, right? Yeah, create jobs, add product, sure. No. So the bankers got in there again and stopped the legislation from happening. And so last year what I did was I basically took it to our town meetings. Vermont, we're Like a lot of New England, we have these old-fashioned direct democracy town meeting forms of government, where every March, all the people in all the little towns in Vermont get together and they vote on the budget and they vote on what fire engine to buy and all of that. If you're a registered voter in our towns, you're part of the General Assembly of that town and you are a voter on that type of issue. And it's also a real popular place to bring popular petitions to. You have to get 5% of the registered voters to sign a petition, and then it can be on the town meeting agenda. So I thought the banking lobbyists can't possibly go to all these little town meetings, and it's a fairly popular issue, so I got a bunch of activists around the state to file these petitions in their towns. And 19 towns last year, well, not last year, this year, just earlier in March, voted to direct the state legislature to establish a state bank. Now, the nice thing about Vermont town meeting is it happens this first Tuesday in March, and that's right about the same time as crossover in the legislature, which is when the bills go from the House to the Senate, or from the Senate to the House, depending on which way. And with that vote coming in right at crossover, the legislation that we had filed this year, which was to take 10% of the treasurer's average daily deposits and redirect it into a state bank that we were going to set up through the Vermont Economic Development Authority, which already exists and already does all the lending, and use that 10% as the first tranche of money to set up our state bank. It was 10% for Vermont was the nickname for the legislation. And because of all those votes, the 10% for Vermont actually got passed. And so now the state treasurer is required by law to take 10% of her average daily balances and put it into VITA, and VITA's been using it for economic development lending, energy lending, and infrastructure lending. It's so successful that the last meeting I was at, because I'm now on the state treasurer's local investment advisory committee, VITA was like, yeah, Beth, we could do a lot more than that. She's like, you can give us more money. We can figure out how to use it. It's not a problem. But they stopped short, thanks to the banking lobby, of giving VITA a banking license. So VITA still isn't a bank, it's still a lending agency, and as a result, the treasurer is going to likely experience some cash flow problems if it got any bigger than that, because one of the beauties of the banking system, right, is you can have money in more than one place. You have it on deposit, but then it's also in your reserves, and it's also what you're lending out. You know, it's how the system works. If you start to count all the places that an individual dollar bill is actually on the books of a bank, it tends to blow your mind because of that 10% reserve requirement just multiplies it and makes it grow at an exponential rate. So the first year we got something like this done was actually the previous year. And that year we got $17 million dedicated out of the treasurer's accounts to energy lending in the state. And that worked so well. The treasurer set up something she calls a credit facility, which is the closest thing east of North Dakota to a state bank, because it enables her to legally sort of slide the money over to VITA, have VITA use it for their lending, and then give her the returns on that lending so that she gets like an interest payment on her deposits. But it doesn't yet allow the state to behave like a bank and use fractional reserve, which is where North Dakota gets 10 times the amount of lending that Vermont is doing. Credit creation, which is what all this is about, of course, is fundamental to our economy. It's actually the basis of how we used to do business before the banks. The mutual credit system is really what it was more like rather than barter. You know, there is the barter networks that are set up, and typically barter networks require one person to have a deal with one other person both ways. But mutual credit is a system where all of us can basically extend credit to each other in return for the things that we need. And there's a lot of mutual credit systems out there. There's commercial barter systems that exist. One of the famous ones is in Switzerland, the Weir system that's been in place since the last depression. We have one in Vermont called the Vermont Sustainability Exchange, where businesses just trade with each other using debits and credits, not real money. We also have time banks, which are systems where people use time to trade with each other instead of real money. And all of those are mutual credit systems. So I got a ride to the airport this morning through the Onion River Exchange, which is our local time bank. That woman will go home tonight and she'll debit my account the 2 hours it took her to give me a ride to the airport, and then I'll do something for somebody else, not for her, to earn the credits that I used for that. So credit creation is fundamental to our economy, and establishing a public bank is what would enable us to do it as the public for our own purposes and for our economic benefit, instead of the benefit of fewer and fewer people with higher and higher concentrations of wealth. I'd like to start with some questions, if that's okay. Comments, questions?
Okay.
I also have a mutual credit game.
Remember, ask a question, don't make a speech.
Yeah.
Is that directed to Judy?
It looked like it, didn't it?
I got kind of a two-part question. First part is, so you got the governor, and probably the attorney general, and some other politician telling the bankers, who we don't know who they are or where they're from, what their background is, telling them where they're going to put the money, or where they want them to put the money.
What the priorities are for the lending programs. That's different than where they're going to
So
actually put
can
the
they
money.
suggest, okay, it's all going to be spent in Keene and Pierce County?
I would think if you had a Keene County bank or a Pierce County bank, then it might be, but otherwise, no, I wouldn't.
So the banks
No.
are local?
Well, it depends. If you have a state bank, I would assume that the state bank would be required to lend evenly, relatively evenly throughout the state. And that would be something that you would establish in its mission that you
But that's what
wrote.
they assumed in 1913.
1913 with the Federal Reserve Act? That's an interesting story, actually. How many people know that story of how the Federal Reserve was established? Oh, a lot of people here. Jekyll Island, the whole conspiracy.
You know, I don't know, here in this state, we have quite a change from, on the other side of the Cascades, they
Oh, I
have
see.
a greater, I mean, we could call this whole region from the Cascades over Columbia, which is because of the disparity in the fortunes that is allocated around.
So that's what you're getting at. Would all the state lending go to the eastern
We
side or
return
the
tax
western
money
side?
on this side of the state. Excuse me, but that's the biggest myth I've ever heard.
It is.
More comes over from Seattle than goes over the Cascades to Seattle. Our road, I-90 be a goat trail from the
Well,
Spokane
one
County.
thing I might interject is you could write a state banking bill any way you want.
Right.
You could have, it go back into the region or the county or the city of Seattle, however you divide it up. But, we could do things like finish North-South Freeway. We could complete the Columbia Basin project and even be able to afford fish ladders to go up around Grand Coulee. I mean, there's a lot of possibilities that we could do if we had that.
If you had a public bank, exactly. And what I was getting at was that you could set up a public bank on the county level, on the city level, or the state level, or you could have it on all levels. It doesn't matter. So it's up to your legislative ambition on how you go about establishing public banks here in Washington State.
Well, the
There
bank-
was a study done. I actually have a study that I'd be happy to send you by the Center for State Innovation a couple years ago on what the economic impacts would be for Washington with a public bank. And like I said, I'd be happy to give it to Rob and you could get it
I've
to
got
Rob.
it, yeah.
So you've already done a study showing it'd be a great thing for the state, actually.
No, the bank was local or they brought in?
Well, the other interesting thing that North Dakota did when they set up the state bank in 1913 is they also set up a state grain elevator, right? So think for a minute about the grain elevator. Anybody here know how to run a grain elevator? No, I don't. So if it's a state grain elevator, they're going to hire professional grain elevator managers to do it. It's the same with the bank. They're going to hire people that are professional bankers who do the right due diligence on loans and who understand what metrics come together to make a business work. If somebody gives them a business plan they want a loan for, or the income level somebody needs to be able to afford a mortgage. That's what bankers do, and they manage things like liquidity risk and credit risk And that's when you want the professional bankers in there. It's true, we don't know who they are, but as long as they meet professional standards and are hired through transparent and open processes and all of that, really we shouldn't worry too much about the professionals that are running the bank. And the politicians set the priorities, but they don't dictate where the loans go or who gets the loans or any of that. They can say, all right, we want more student loans to go out. That's a good priority to set. I'd like to see it so our students weren't going into indentured servitude to get a college education anymore. Indentured servitude was better. Back then, you were done with your debt after 7 years. These days, you're in debt for 30 years and you can't even file bankruptcy to get out of it. It's ridiculous. So I mean, there are some things that politicians can do vis-a-vis the bank, but it's not down to the level of detail of which county gets loans and which person gets loans. So, you're back here?
Well, would you say the best remedy for it's a very good question, is the checks and balances that are in whatever bill is passed by the legislature and signed by the governor? That's what, and that, the citizenry has to be involved with that, because if you leave it up to the politicians, usually you're going to get bad legislation put into law if you're not, checking that when they're negotiating that.
Or you could have a citizens advisory board that serves also. The fact that North Dakota does it with their governor, attorney general, that's a relic from 1919 maybe. I mean, you could do it a lot of different ways. It's not one way fits all.
Yeah, I'd like to follow up on the gentleman's question about who's going to be making the loans. And you're saying the politicians will not be involved in picking the companies, okay? So let's say that I'm one of the bankers, right? And I have a friend who has a business. So when companies come to me, who would I give the loan to? My friend or some stranger off the street? And remember that I pay no price for being wrong. You were talking about privatizing gains and socializing losses, right? So the taxpayers are on the hook for whatever losses are incurred, right? So I give the loan to my friend, he gives me some kickback, and then he goes bankrupt, the bank loses money, and the taxpayers are on the hook. So how do you address that?
Hang on, that can happen now in the private banking system, but it typically doesn't, because professional bankers, if they are dealing with somebody who they consider a friend, will typically rule themselves out as their loan officer, because that's a conflict of interest if they're behaving professionally. So, I mean, obviously, there's no completely foolproof way to protect from corruption, because what you're talking about is corruption, and it's illegal and wrong.
But ma'am, here's the difference. If I'm a private banker and my friend comes to me for a loan, and it's my money on the line, and I see that it's a stupid idea, I'm going to say, sorry, I'm not going to give you a loan. And the reason you're saying this happens in the private sector is because of what Rob said, which is we don't have capitalism, we have fascism. And the banks know that they're going to get bailed out by the Federal Reserve. So instead of solving the problem and getting the government out of the banking system, you're now suggesting let's add another layer of government and trust these people because they're good.
Actually, no. That's not what I'm saying, but I can see why you might interpret it that way. After all, public and bank in the same phrase does carry with it a lot of interesting connotations. The people on the right don't like that it has public in it, the people on the left don't like that it has bank in it. But what you're describing in terms of a transaction is a corrupt transaction, an illegal and wrong transaction. I think all you need to do is look at the experience of the public banks in the world to see that that just isn't that common. North Dakota isn't plagued with a huge corruption problem. Neither is Germany. And it's partly because when you move to this public banking model, the bankers themselves are embedded in the community. They're not run out of the next state over. In our case, Vermont puts its money in TD Bank. Anybody know what TD stands for? Toronto Dominion. It's a Canadian bank. So we're sending our money to Canada instead of keeping it in Vermont. Now, if it was in Vermont, it would probably have the same loan track record as Vita does now. Vita has the same problems you're describing, where it's public servants making loans to people who have businesses in the state. They have like a less than 1% default ratio because they do it professionally, they do it ethically, they follow the law. We do still have the rule of law in some parts of this country. I don't know about here. I don't know why you would think that corruption was any more likely here.
Well, the same is true in the private sector. And the bankers are still making these risky loans because they know they're going to get bailed out, and some of them go to jail. But nonetheless, the fact that they live in the community doesn't mean that, they're guaranteed not to be a crook. You're saying, world experience with public banking, right? I was in China this summer, and I noticed that there's the same pictogram in front of lots of, company names and banks, and I was wondering about that. So I asked the interpreter, I asked, what is that? And he says it's renminbi. And I said, what does it mean? It means people's, people's utilities, people's bank. It's a great idea, and especially considering that the account.
Renminbi, excuse me, means currency. B is people's currency.
People's
B
currency.
is currency.
Right. Thank you for the correction. I'm not an expert on Mandarin, but the point is, it was the same pictogram in front of the names of the bank, and yet you have these people, the managers, going to jail all the time and getting executed or getting life sentences because of corruption.
Can I answer these? I think I've
Sure.
got to answer these two
Go
questions. I'm itching to kind of.
Oh, come up and be on the microphone.
Oh, okay. With this, I think these two questions deserve kind of a related answer. I'm sorry, that's okay. It's my good side. So you're in a way talking about scope of government. Now, by setting up a public bank, you don't enable the government to do more, right? What you're doing is making government actions that you're already conceding are necessary by virtue of saying, well, let's have a government that we elect. You're enabling it to operate without a reduced cost. Because basically the cost of operations are, you're cutting the cost of governing that goes out to the corrupt, as it largely is, we've discovered, private banking sector, right? Private also in quotes, right? And you're keeping profits that are effectively made by loans extended to the people in the pockets of the people, right? So this is actually shrinking government. It's shrinking government, you see, because government becomes cheaper to run, right? So hence you save on property taxes. Now, to your point, now hold on, what was your point? Because I had all this in my head now, I forgot.
You're saying that it's because it's public and because people live in the community.
Yes. Right. So right now you have a system where bankers can pay both sides, fund campaigns to politicians make laws to their benefit. And then, when bad things happens with the public money, the politicians can say, look, the bankers did it. Okay. In this system, at least, you would require transparency, because it's the public banks, the public have the right to see what's happening with that money. And if the guy in the bank corruptly funds a project because his buddy is running the project, then I, as the voter, make you, as the politician, who has not punished that banker, right? I make you pay, because I can vote against you, right? So we have no such power when the public money is dissipated or, basically corruptly lost. So, and I know if you're a libertarian type, and I know there are many libertarians in this room, we kind of go, oh, democracy, like it's like democracy versus a constitutional republic. Well, it's never been that way in history, and I give a whole lecture about how, times of tyranny, democracy has been brought into, to help the values on which constitutional republic and individual liberty rely. But, yes, so there's a kind of accountability here. There's accountability plus transparency that our current system doesn't already have. Now, if you're putting theory toe-to-toe with theory, if you say, well, this sounds like more government, which I'm trying to say it isn't, but even if you think so, if your alternative is to have the public money in the corrupt private sector that runs, as you rightly pointed out, in this fascistic way. I mean, there is nothing free market capitalist about our monetary system, right? Our private banking system right now. It is not something that free marketeers and libertarians and conservatives should be saying, well, that's the free market operating in finance. American finance is essentially anti-free market, precisely because of the rules that have been set up to privilege this strange sector of our economy, right? So the alternative in the real world, the alternative that we have to the public bank isn't some free market, private, truly competitive banking system where money can is being stored and deployed from, right? So I just want to kind of, I think it's important, right? Because I think, like you said, public and banking, and we have notions. I think they're like almost trigger words, right? And talking about money and government. I mean, I said I'm a classical liberal. I spoke at the Washington State Convention for the Libertarian Party preceding Gary Johnson this year, right? So I am not here promoting the opposite. I'm always promoting the shrinking of government, and I promote the shrinking of government for the welfare of the people. There is no panacea, perhaps, but I think these specific concerns, given the alternatives, I think what Gwen's suggesting is a step in the right direction, not the wrong one.
May I address something?
So hang on. You've had enough time for now. Let's turn it over to somebody.
Okay, so the bank in North Dakota, and somebody mentioned there's going to be perhaps one in New Jersey. Was that right?
He was making a joke.
Well, okay, all right.
There's no public
I did not know. Okay, so what you're planning on in Vermont, now, is it going to be 100% deposit backing the loans, or is it going to be a fractional reserve? I don't know.
Right now, what we have is 100% deposit back in the loans.
Right, okay.
Because we've enabled the treasurer of the state to transfer 10% of her average daily deposits to the Vermont Economic Development Authority for lending. We did not confer a banking license on the Vermont Economic Development Authority, therefore it's that 100% reserve agency lending, kind of like a revolving loan fund at a community development financial institution. But if you got a banking license, then you could be a credit creator based on your reserves, which are also based on your deposits, in much the same way that our banking system is.
So North Dakota's that way?
North Dakota uses fractional reserve, yes.
So Spokane County, for instance, we have an average balance of $800 million. So if we had fractional reserve, we could be $8 billion. But the difference what Vitaly is afraid of is, we don't have the profit incentive there. We don't have trading desks where people are out buying derivatives. We're not looking at short-term results. We're looking at safety as number one. But our mission is local infrastructure. Is this thing going to pay out? What value is it going to add? It could be Ian Robertson's project, or it could be Bonnie Major's farm project. It could be the North-South Freeway. It's going to be something that would add value, and the people that work there are bureaucrats. I mean, they're going to make the same amount no matter what. Then, the longer they're there, they might get pay raise, a step up. So it's a totally different thing, but it's not going to be, and we work with the community banks too.
Yeah, come back in a minute.
Sorry. No, I'm done.
So that is your
Well,
question.
what is North Dakota? Do you know what North Dakota is? Is it an 8-to-1, 10-to-1, 400-to-1, like?
The fractional reserve.
It's about,
Goldman Sachs was somewhere in the vicinity of 400-to-1.
looking at the books I've seen, it looks like 10-to-1. Because they actually loan 10 times more than Vermont does with the same base. And the only way to explain that is through the fractional reserve process, right? Over here, you had a question, and then you, yeah.
So, continuing in the same vein, does the federal government or the Federal Reserve, the private banking, Wall Street
Cartel
entity, do they have any say then on the rules that are being set or have been set in North Dakota, or currently this initiative that's getting off the ground in Vermont? Can they dictate how the banks are going to be run in some way?
As I understand it, North Dakota could access the Federal Reserve window if they wanted to. That's the banking process whereby banks can go to the Federal Reserve to cover their short-term reserve shortfalls. But I don't believe they do very often, and no, I don't believe the Federal Reserve has a lot to do with what North Dakota does or doesn't do for lending. So the answer is no.
And the money then that is lent out is the same money that is being deposited, and it isn't money that's coming then somehow, at least indirectly, from the Federal Reserve?
Correct. Most banks go to the Federal Reserve window as kind of a last resort. In fact, if you go too often, you're going to have the federal regulators on your case relatively quickly. That's why banks get set up with capital. You have to have capital to establish a bank, and that's actually one of the challenges you'll face here. Where do you get the capital to set up the bank in the first place? Now, in our study in Vermont, what we found was that the capital existed already on the books of the lending agencies that the state had chartered as unrestricted assets. So if you're embarking on this public banking exercise, which it sounds like you are, learning how to read a combined annual financial report of the entity that you're dealing with, the state or the county or the local municipality, is a good skill. And the Public Banking Institute will be offering a class in how to read a CAFR. They're called CAFRs for short, so that you could start to see where the capital might come from to establish your bank. So in Vermont, our existing entities had it already on their books because they've been in the lending business for a while, and the same unrestricted assets that they keep on their books to cover their losses in the event of a default or an event of interest rate problems or any of the risks that banks manage as part of their daily practice could easily serve as the capital for the bank. So who is familiar with your local budget here in Spokane? Anybody? Do you have rainy day funds?
Ask Rob about that one.
We have a 10% reserve fund, which is just they try to keep the starting cash for the year 10% of the expenses, but we have to loan the money by April. I mean, there is no account that says reserve fund and it's got, $10 million in it or whatever. It's just a mythical thing.
Right, well, I used to be a town manager in Vermont, and admittedly, we're a lot smaller than you are, but we had a fire truck fund, and we had a capital fund for our roads, and we had a landfill fund, and we had this fund and that fund, where the municipality just socks money away in the event that they're going to need to make a large capital expenditure. Those funds could probably be used to capitalize a bank, because after all, once you establish the bank, you're not going to need those funds for those purposes anymore, because you could issue yourself the credit that you need to make the purchases that you need at the time. That's what North Dakota does. So there could be a shift from keeping all these funds squirreled away basically in the private banking system. I actually think it's the great hidden secret of our private banking system, all of these funds that the states keep, and it could be turned into the capital for a bank.
Well, continuing on, connecting the dots, you had talked earlier about how public banking is counter-cyclical. What I'm not understanding is how it can be that when the economy slows down and activity slows down and taxes are not coming in to government coffers in the same amount, then if you have some kind of requirement, even if it's set by the public bank itself, how is it that the public bank would continue to have the wherewithal to keep putting out loans even though the reserves are dropping in order to be countercyclical?
Well, one of the things to keep in mind is that the Bank of North Dakota has been at this since 1919. You don't instantly have a comparable situation here. You do need to build toward it. But the capitalization that's required for a bank, so North Dakota has a lot of capital. And so they are in a financial position to do counter-cyclical lending when it's needed. They've made a lot of money. They can pay a dividend to the state of $300 million and not blink. It doesn't destroy the bank. I think, most of us don't understand banking, and I'm not a banker myself. So, I would encourage you to read up on the subject and to learn more about it, because I'm not going to be able to teach you much at all tonight. But this idea of the capitalization of a bank is really something to look at, because in order to be a bank, you already have to have a lot of money sitting there. And having that money enables you to extend credit. Banking is fundamentally a credit creation process. And while we imagine that what banks do is loan out their deposits, because that's what we've been taught in school, it's not really what happens. They extend credit. You've got one department of the bank over here giving out the loans, another department of the bank over here trying to attract deposits. The T's get crossed and the I's get dotted, but on a regular daily basis, they almost have nothing to do with each other, because the bank is able to extend the credit based on their banking license to the mortgage holder or the business or the car loan, because they're a bank, and that's what banks do. And so the relationship to deposits is, flimsy at best, in the best part of the year. Once you enter into bank land, you enter into upside down town, where suddenly debts are assets and deposits are liabilities, and it's something. Tom Seguros, one of our people in the Public Banking Institute, has written this great book called Checking the Banks. And it's a real how-to primer on how to really understand banking for people who want to change the system. And so I'd highly recommend reading that book. I've learned a lot of what I know about banking from Tom, actually.
What's the name again?
Tom Seguros, Seguros, and the book is called Checking the Bank. So I'm going to move over here for a second because you haven't had a chance yet, and then we'll be back to you. Yeah.
Okay, eventually I want to get to fiat currency and the moral hazard and all of that, because that's a lot of our problem in this country. I don't like fractional reserve banking the way we do it now. I think it's fraudulent. But we're really beating up the banks and act like the banks are these evil things. But it was the community development laws that forced the bankers to loan to people who weren't qualified that created a lot of the problems. So the politicians have forced the banking system to do things that they would not have done normally. So that was a problem. So, they're not, I would like to get rid of the Federal Reserve. It is a cartel. It is ripping us off, okay? But really, let's be fair here, okay? The politicians have done a lot of things that have hurt the banking system. Okay, so fiat currency, what do you think? It's an insane system, creating money out of thin air. There's a huge moral hazard in allowing banks to do that. I'm Sound Money Committee, right? That's
right. You're an old bug.
So what do you think about holding some commodities, whether it, our constitutional currency, gold and silver, is what I would recommend because it's constitutional, but a basket of commodities, something of value that has to be produced that people can't just create out of air.
Okay, I'd like to just put that question on hold for just a minute. I have a lot to say about it.
Oh, good.
But that's the other book. Right. So let's just put that question on hold for a minute, because I do want to answer the questions about public banking first. And that's sort of only kind of question. Oh, sorry, here.
My question, using Vermont audits, okay, who actually audits, as you call it a public bank, but it's actually, to me, it's a government bank. Who audits that?
Well, right now, the way it works with the private banks is that the Department of Banking and Securities in the state of Vermont is responsible for regulating our state-chartered private banks. And the FDIC and the national system, the Office of the Currency Controller, Federal Housing Finance Agency, all of them are responsible for keeping track of the federally chartered banks. Because there are two different kinds of banks. There's the banks that your state gives their charter and the banks that the federal government gives their charter. Now, the reason that we have all these regulations in place is because in 1913, and this answers your question a little bit, we basically delegated the constitutional right we have as citizens to the private banking system through the Federal Reserve Act. Article 1, Section 8 of the U.S. Constitution guarantees to Congress the right to coin money. That was delegated to the Federal Reserve in 1913. And ever since then, it's been a function of the Federal Reserve Bank, which is a private bank, to do that, to make money out of air. That is what their business model is. They make something out of air and they charge the rest of us the permission, the interest to use it. It's a great business model if you can get it. It's exactly true. I mean, when TARP came into being, TARP was that big bailout of the banks that occurred before the stimulus package. The Federal Reserve created all that money out of nothing and deposited it in the banks, out of air, with the taxpayers backing it. And they not only bailed out the banks, but then they bailed out AIG, which was the insurer of all the banks. I mean, it was all really kind of crazy.
Now they turn it all into assets.
Nah, right. That's what I mean. You enter upside down town where suddenly debt is
So who
assets.
audits the public bank?
You know, our senator, Bernie Sanders, was the one who was calling, and Ron Paul, I guess, also helped, was calling for an audit of the Federal Reserve. I mean, and that was like the first time it had been done.
It wasn't done.
And it really wasn't. But that's where we found out about all the money that not only went from the Federal Reserve to our banks, but to all the overseas banks, bailing out Europe, and crazy amounts. You can't even fathom. I don't know about you, I can say the word $16 trillion, but none of us have any clue what that means in terms of, and now it's in the quadrillions, these derivatives markets, and the exposure of the banks. So
$100 bill stacked to the moon.
what you're speaking about, though, is the question of accountability and transparency. That's what we want when we want banks to be audited, and we want to know how they're spending their money and how they're operating. Accountability and transparency comes with the public sector. I know I've worked in the public sector a lot of my life, and we jokingly call it life in the fishbowl, because we are required to report to the public. We're required to make our records available. The banks aren't.
Well, I work for a mortgage broker firm, and every year we get audited by the state of Washington, and of course they find something and they fine. So my question is who is going to audit? I mean, I don't want the state people auditing the public banking.
You would definitely surely you'd have a private audit. I mean, you would.
You have an objective audit. You do.
The state auditor.
You're getting Deloitte
City,
too.
town governments, county
the state
governments,
audit.
libraries now.
State audit.
They do a damn good job. Read the reports. They have findings all the time.
Well, sure, because the fines are going to the state. That's all it's
They're
about.
pretty big.
They don't care about A, B, or C. It's money, income to the state of Washington.
But the people also. Sorry.
It's like having a hand guard the hen house, you know? It's the same people doing the auditing. So how does that make sense?
I mean, when it comes to making the public sector accountable,
Well, but then we
That's
get into all the fraud with
our
like the
job.
Moody's investing rating agencies and all the other
Absolutely.
agencies
Oh,
that
yeah.
are controlled by the banks that are,
Absolutely.
taking us to the cleaners.
Absolutely, sure. But the point is,
That's where I really believe that it has to be like citizens committees of people from all different walks of life that have a
Yeah, it's our
specific
job.
level of competency that are
it's our
disinterested
government, it's our job to
with
make
that.
it accountable.
Because
Can I just ask
people in this
for,
country are advocating their citizenship
A
role
moment.
to the politicians
Yeah.
and see what the society that we're getting.
the Constitution tells us how to do it. It's all about setting things up against each other, right? It's competition in governance. It's people with opposite interests having to check each other. So in
Checks
this sense,
and balances.
if you're having a public bank, you can have, it's not either or, it's both and. You have, get Deloitte and Touche in, right? But also, because it's a public bank, you legislate that every cup of coffee that anybody drinks at that bank is, it goes online, and you let the people in real time see what's going on. And if you want to have official committees civilian committees as well as the Deloitte and Touche, and have some process, you can, but
Well,
of
and see,
course these things
that's
have
what
to-
I'm advocating, because unless that's
I
the
actually
case,
don't know.
combined with like how the law is written and
Well, the
enacted into
banking
law,
and
that's
public,
like the key
the
thing.
Office of Banking and Public Securities.
You know, they've
Okay,
been doing it for.
hang on. We're getting, there are people queued up who want to ask questions. So okay, we have over here, but over here, and then over here, okay?
So, what I'm really interested in is you're going to Seattle, you said tomorrow or so, and I'm really interested in how this could work for the city of Spokane, and so I want to know kind of what you're going to say to the city of Seattle, or what you envision the discussion is going to be about from them to you guys.
Well, I would probably give the city of Seattle a very similar talk to what I gave you tonight, which is, what is a public bank? Remember going back when we began, it's like, okay, how do we do it now? We put our big public deposits in the private banks and we borrow them back.
Where do you think they are in this process? Are they just starting from scratch?
As I understand it, yeah, this is like one of their big first meetings about it. There's several city councils that are interested in it. Nick Licata is the man who invited me here. And there is a public banking group based in Seattle that's been working on this for some time. There's also a Washington State initiative that produced this report. There is a report on the economic impacts of a public bank for Washington State. Right, and I have a copy of it. I dug it up to come here. It's a few years ago.
Wants to come over and discuss it. He's introduced a public banking bill for several sessions now. And believing that how to capitalize it is, they really are doing a lot of work, a lot of research. They've done some studies. And it's been pared back to the point of a state investment trust to try and get the foot in the door and get it working. But he's more than willing. He'd love to come to Eastern Washington. I'm not quite certain where it's going to be in this session. It'll probably be after the session. We'll see. But my other point is, you talk about these funds that tend to be in various places. And one thing that people don't understand about our government here in Washington, I was a trustee of my county library district for 11 years, which is a totally taxpayer, or property tax funded district. So we're fire districts, all the county libraries, there's a lot of junior taxing districts that only get property tax money. So we were lucky. We created our district in 1996. We started collecting tax money in 1997 and didn't start operating until the first of the next year. So we set up one of those funds, because every one of those districts needs to pay operating expenses from the start of their tax year, January 1st, until property taxes come in. Right. It's insane. They basically hang them all out to dry. But what really happens is most of those districts throughout the state are borrowing that money for 5 months
Tax
of the year.
anticipation notes, we call it, right? Or bond anticipation notes, where you know you're going to get the money, but you got to borrow it while you get there, and you're going to pay interest on it, and all of this interest continues to enrich the banking system. I'm going to get to your question. I haven't forgotten about you, but over here.
Well, I just wondered, you just said that it had been brought up by Dennis Kucinich and various different states have brought it up. What is the rationale used to oppose it?
Ah, great question. What do the bankers say to me when I'm in the legislature, right? Trying to get this through. It's kind of funny because they're paper tigers that they put up, or red herrings, I don't know what you would call them here, but one of the concerns is, oh, it's so risky doing all this lending with our public money. Well, we're already doing it. In fact, VITA has been doing the lending for years and years, and what VITA does, and these state lending agencies, is they do what we call correcting market failures. Right? They go after, the state agency that does the lending now does lending for those who could not otherwise obtain bank financing. So they're doing the highest risk lending already. And yet, adding the public bank to the mix wouldn't change that at all. In fact, would probably make them have access to some of the market lending opportunities they could get and be more healthy. So but even, more healthy, they have a very low default rate as it is, because they're knowledgeable about the lending, the business community. They make loans using due diligence. It's not like VITA is a corrupt organization that's giving money to all their cronies and never collecting the loans. They're a very well-managed group. The other big criticism that we got, and this came from the state administration as well, is, oh my God, it's going to destroy our bond rating. Okay, well, think about this. We show that with a public bank, we would increase the state's gross domestic product by $340 million and increase employment by 2,500 people at least. That tends to make me think the state's going to be better able to pay off their debts, which is really what the bond rating is about, than before. So that's laughable too, but they got that right from the banks because, as you so accurately represented, the bond agencies are owned lock, stock, and ticker tape by the banks. In fact, in a court case recently where they were being taken to task for the AAA bond rating, they were giving the junk bonds that were being sold prior to 2008 as asset-based securities. Sounds really good until you realize that it's just loans sliced and diced into a bunch of different parts. They claimed that their bond ratings in court, under oath, were no better than journalistic opinions. And therefore they could not be held liable for the false positive reading they were giving on all of these judgments. But let me just speak to both the question that you asked and all of our outrage at the system. I hear that tonight. We're all really mad about what's happened in our economy. We're mad that the banks have run away with the store and gotten away with it.
Yeah.
Not a single person has gone to jail for the massive fraud that was perpetuated on our country, on our economy, on our livelihoods, on the things that we need to both make our lives a decent life and to hope that our children and grandchildren are going to have a decent life. And that's what's bubbling up all over the place. That's why in this room we have people from both sides of the political spectrum. A rare moment, actually, that the people from the Tea Party and people from Occupy are going to be in the same room asking for the same things. So at the Public Banking Institute, we're pulling together a nonpartisan alliance to try and address this problem. And we're going to have our next major conference in New Hampshire next December, first weekend in December, which of course is going to be when all the presidential wannabes are tromping around trying to sell themselves to the people of New Hampshire. So we're hopeful we could get a lot of them to come to the conference and talk to us about what they plan to do to correct this incredibly unfair system. You know, when you ask about fairness, that's all of us, that's all any of us want. A fair shake, a fair livelihood, a fair way of earning a living and putting a roof over our heads and putting our children through college. It's not asking a lot. And yet the way the system itself is structured right now, it's incredibly unfair. All of us are transferring our wealth every day to the very, very small percentage of people. And it's not the 1% anymore, it's the 0.1%. It's a very, very small fraction.
Under
of people
500 people.
Yeah, under 500 people in this country that control the vast majority of the wealth, and that means our potential to have a healthy economy in the future. Now, there's a lot of debates that can be held about the monetary system, and I write a real critique of it in my book called Creating Wealth. Fiat money, money that comes into existence out of nothing, has been a function of government since government was invented, really. It's called the right of seigniorage. The word comes from the idea that the king, the seigneur, brings the money into existence, offers the coin of the realm. And there's been lots of forms of it down through time. Back in the Middle Ages, when the church actually minted coins, along with the kings and the princes, the coins had the bishop's picture on them. Now, by the time you got to be a bishop in the old church, you were pretty old. You weren't going to be around for a lot longer. And what would happen when you died would be that the church took them all back. It was called renovatio monetae. It was a Latin term for taking all the money back. And they didn't give you new money. No, they just took it back. And then you had to earn more money by working for the church and earning those church coins. It was effectively a negative interest form of money.
It's like slavery.
No, it was effectively like a negative interest form of money. Because if you got paid in those church coins, you knew that the bishop could die tomorrow. So what was your incentive with those coins? It wasn't to hoard them in a box in your room, oh no.
To circulate them.
To spend it as fast as you possibly could. Because that was the way you got the value out of that money, was to spend it. So what happened during that period of history when the church was coining this money in the Middle Ages in Europe? What you see is the erection of these massive cathedrals. Because when people don't have an incentive to hoard money for themselves, the only way they can produce wealth for their community is by building essentially community infrastructure. Because those cathedrals, in addition to being magnificent examples of our piety, were also tourist attractions, let's face facts. The pilgrimages were going on back then, and if you had a nice cathedral, you got lots of people coming to your town, buying your meals, staying in your inns, buying your products. You know, it was an economic development tool of the time. The same thing occurred back in Egypt, where they would use commodities, again, as the basis for the currency. They would put money in storage, put food in storage, rather, and they would get these little shards of clay called ostrakhan that would have the amount of food they put in storage and the date that they put it in storage on those shards. And the further that shard got from the date, the less it was worth. So again, it was, even though it wasn't by design, it was effectively a negative interest currency, because your incentive, once you got those shards, was to spend it as fast as you could, because the further it was from the date, the less it was worth. And what did you see during the Egyptian times, when these types of currency were being used? You saw the production of aqueducts that are still in existence and useful today. You saw the construction of the pyramids, lots of community infrastructure that lasted. And it was partly because the kind of money they were using wasn't associated with positive interest, which is almost like we don't even think about that today. We assume the money has to come with positive interest and that we will gain value in our lives just by hoarding it for ourselves. But that isn't the way money has to work. A mutual credit system, like a time bank, doesn't have interest associated with it. You can go into debt. It doesn't mean that your debt is going to accumulate and accumulate and accumulate like it does when you have compounding interest attached. And it's the same with the interbusiness transfers that go on in the beer system in Switzerland, a very successful system. Over 75% of the businesses in Switzerland are members, and it adds a huge amount to the Swiss economy. It has proven counter-cyclical effects. So money, fundamentally, whether it's fiat money or mutual credit or fractional reserve, whatever it is fundamentally an agreement.
Yes.
It's an agreement that we all make to accept one thing or another, whether it's gold or food or credit or debt, as the thing we're going to use for exchange. And in a democracy, we should be able to change that agreement, and it's high time we do. You have another comment or question?
Yes, it's a comment and a question. So you described how the shards worked, how they were worth less the more time went on. That sounds like inflation, more so than negative interest rate. And I do not exactly understand how building a pyramid in the middle of a desert, which is basically just a very fancy, expensive tomb for some dude, how that benefits me as the average Egyptian. Could you address that?
Pyramids are interesting. There's a lot of theories of what they were for, and it's not widely accepted that they were tombs.
No.
They were actually likely to be energy generators on a form that we don't really even understand to this moment in time, because there's actually no real explanation of them as tombs. So they were maybe, instead of being tombs, they were large energy generating facilities.
Yeah.
And how did it benefit the people that were there? It benefited them by giving them work to do that contributed to their community. It was like a job. I mean, we imagine, I think one of the other myths about ancient Egypt is that we imagine it was all built with slave labor. The discovery of this ostracon form of currency is a relatively new discovery. And what we've learned is that it wasn't necessarily all slave labor, but they used a form of currency that we didn't previously recognize as a means of exchange. But it wasn't a store of value. This is the other thing that's very interesting about our current money system. My view is, and this is shared by my co-author, who was a central banker in Europe, helped invent the euro, and left the central banking system because he saw how bad it was, is that the biggest problem, unfortunately, is that we vest all of our economic wealth and value in this one thing, this privately generated debt-based dollar that we use as our means of exchange, as our store of value, as our unit of account, all of the functions of money. And by vesting it all in that one thing, we've essentially created a monoculture crop in our economy, in much the same way as a monoculture crop would work in the environment. So that if something goes wrong in the banking sector that is the owner of this form of money, the entire economy comes crashing down around it. Whereas if we had more diversity, we had a food-based currency that I've developed actually for the state of Vermont. It isn't implemented yet, but I have designed it. And it's a lot of what you talk about, a basket of commodities that could be used as a basis of value for exchange. We had a time bank, we had a commercial barter system, we had all these different types of means of exchange and stores of value. We would have a much more resilient economy than we do right now. Right now it's very brittle. The next thing that goes wrong in the banking sector, and you can bet, regardless of all the talk I'm giving you about public banks tonight, you don't have one yet. So your public deposits could vanish tomorrow if it all comes crashing down. Yeah.
One question that I've had throughout the evening, and I've enjoyed this presentation very much, is what benefits public banking would bring to, say, the city of Spokane, where our city fathers recently went down to San Francisco to talk to some large banking firm down there about funding a bond issue and finding out what kind of rates the city would qualify for. So besides the issue of just simply getting a loan, what kind of a difference might it make in the terms of the loan, say for a city like Spokane, or right now in Vermont or in Fargo, North Dakota?
Okay, so let's just close our eyes for a minute and imagine that Spokane has a public bank. And then instead of sending your deposits to a large bank like Wells Fargo, I saw that sign on the way in, I bet you that's where your public deposits are based here, if I had to guess. You had it in the Bank of Spokane, which is owned by the citizens of Spokane and used for the citizens of Spokane's benefit. You wouldn't need to go to San Francisco to talk to those bankers because you'd be lending the money to yourself for that infrastructure. And the interest payment that you could generate on that lending would be coming back into the general fund of Spokane.
That was my point about effectively shrinking the cost of government. Exactly.
You'd save a bucket load of money on every road, bridge, hospital, school, any other kind of infrastructure that you develop. As I said in the beginning, half of the money you spend on your roads and bridges now is a hidden tax to the banks. Because you're paying that bond interest to the banks. They're the ones who buy the municipal bond. And there's a whole other thing that's going on in the municipal bond market that also is boding ill for good financial management by municipalities. One is that the Obama administration has been working to cap the amount that people can claim on their income taxes when they hold municipal bonds, because municipal bonds are tax-exempt bonds. And the way that works, you buy the bond, you get the interest rate on it, it's tax-exempt interest on your tax return. So that means that the bonds that you sell to the private sector to build your roads and bridges and highways can be offered at a lower interest rate because there's that it's not arbitrage, but it's like you get the tax benefit from not having to report that income on your income tax. So they're trying to cap that on one hand, and on the other hand, the Federal Reserve and the Bank of International Settlements have just ruled that these municipal bonds cannot anymore be counted towards something they call high-quality liquid assets, which is essentially the same as cash. What these two things will do, if they're allowed to stand. Now, when that high-quality liquid asset rule came out of the Fed back in September, the radical fringe group known as the National Association for State Treasurers rose up in protest because it was such a bad idea, and they could see that it was going to destroy the municipal bond market. What both of these things will do is make the lending that the borrowing that municipalities have to do a lot more expensive. And that also opens the door for municipalities to have public banks. Okay, I
wondered if the document that you've been talking about, that according to state banking in Washington, is electronic.
Yeah.
And if we could get somehow it either on Facebook or somehow so that we could get it around for people to get reading.
Sure, I could post it to the Facebook page for this event when I get back to my hotel room, provided I can get on the internet.
Wonderful.
Yeah, that's no problem.
So are the,
It'll be a link, you know, not the click.
Yeah,
on the link.
right.
are the employees of the public bank state employees?
Yes.
So our government's grown.
Yeah.
Well,
We're paying the
It was
wages, their retirement.
well, the bank pays their wages. The bank actually earns money.
You would
Like
be
a bank
saving
would
orders
in-
of magnitude more as a state than you would be paying for the people that live in the
Yeah,
state. I mean,
yeah,
it
yeah.
wouldn't even be close.
Maybe in a different state, but not Washington State.
Except
There's
that.
Yeah, you said that it would make it very easy in a place like North Dakota, if the state government, municipalities needed money, they could go to the state bank and very readily get cash
Orders of magnitude.
loans from them. Is that correct?
Sure, or you could, if you had a municipal bank, you could do it internal.
So what is the control to keep municipality and governmental politicians from just going a little crazy on their budgets because they know they can tap the bank?
By the end of the lottery.
Well, all I can say to that is, look at North Dakota. They haven't done that. They've been run professionally, they've been run within good guidelines. I mean, it sounds like you imagine that government is going to behave in ways that are illegal and corrupt as a default. I don't actually believe that myself.
This is the mayor who was minting vanity gold coins.
You know, all I can say is that in terms of transparency, corruption, and accountability, it's our job as citizens to try and stop that from happening by continuing to hold their feet to the fire. Okay, we have one there and then up here, and Rob is I'm going to give the microphone to him.
Before you get in trouble.
Yeah.
I think one of the challenges is in Washington State is this disparity. I mean, a lot of times we feel we're like Oliver Twist asking for the second bowl of gruel. And when you get a chance to go over Seattle, compare their state roads to our state roads, and then you draw your own conclusions. But I do think there has to be some sort of regional authority.
He's the treasurer, you know.
Correct.
You can do this on the county level.
And just for, we have $800 million in the county investment pool, and we're borrowing, I can't remember what last year's number is, but it's $1 billion-ish regionally that we're borrowing, and we're exporting, to his point, a huge amount of money outside of the state to bondholders. And I'll get that number for Rob at work tomorrow so he can put it up on Facebook on how much money regionally we're paying in interest. It's a significant amount of money.
Which is increasing your taxes.
Yes, it is hugely increasing the cost of government in just a massive, you could, I don't know how many departments you could hire with the amount of interest that leaves the region, how many teachers you could hire, how many whatever. So to say you could easily run a bank on the amount of money that we pay in interest, it would be a huge, huge savings. So
Exactly. We estimated that just 1 year of interest payments alone would save Vermont $100 million. That's a huge amount of money for us.
Half of all capital construction is very good.
I'm giving it to him.
Okay, thank you very much, Gwen. That was very, very interesting. In a couple of days, we'll have this YouTube up on the Facebook website. And, you can send it to your friends So you can send it to your friends. And one correction, it's not the money is the root of all evil, the love of money is the root of all evil. Is it who do you worship, God or mammon? And right now we have a lot of people that worship mammon that have taken us, really. And I love, the idea that we have grassroots here. A lot of new friends.
What's the Facebook say?
Let's see. John put it up. What's it called?
The Facebook site is?
It's for this event, so I think it says state bank meeting. We'll get it to you, Dave.
Okay.
Yeah. Okay. But there's I have a new friend, Elliot Fabric here, and been friends with Bonnie for a long time, and Morton, and we're all. We might have different solutions to things, but we all know our country is in trouble. Like I said, it's not a progressive or libertarian problem; it's an American problem, and we kind of need. It's our problem here, so. We can't do anything about the Bilderbergers or the Illuminati or whoever these people are. We can do something about Spokane County. I invited every local elected official here tonight, and I don't see any.
One.
Well, me, yeah. But talk to your local officials like that, and maybe we need to form a kind of like an ad hoc committee or ad hoc group to start pushing this further, I asked the state treasurer twice, what do we do if there's a bond collapse or a dollar collapse? And he never answered me. I mean, it's not on anybody's radar. It's very important. People that are informed, like you guys, know that we're in trouble. So anyway, like I have friends here, my progressive friends, we'll have a few minutes where you can get refreshments back there and mill around. And if you see someone not talking to someone, talk to them. You might make a new friend. So once again, thank you. Maybe we could do something to get Gwen back or Ellen. Read Gwen's book. It's really good. We didn't even touch on that. She had some great ideas for alternative currencies based on tuition and trees on public land, that are just sitting there. So there's lots of good ideas. And if on your way out, if you think this has been of value to you, then drop what you can in the bucket.
Can I make one?
Oh, go ahead, Robin.
Just real quick. One meta point. These discussions inevitably become theoretical and abstract, and there we are talking about how we want to shrink our government. But let me say here something I often say to students in other contexts. Don't believe us. Just don't believe us. The answer to a lot of these questions is empirical. In the history of the United States, there have been different forms of public banks. You can go and read about them and see if they resulted in more government or less, more corruption or less. And today, and also in history, other countries and regions of the world have had different forms of public banks. So, of course, we can have these, and I think basically, actually, all of the questions really are coming from basically the same place. I mean, I think we're all concerned about putting more money, more power in the hands of a political class that tyrannizes us. And I think if we didn't feel that, we probably wouldn't even be in this room, right? So, I have no skin in this game. It doesn't make any difference to me. But one thing that if we are going to win as Americans, and excuse my British accent, but as Americans who care about, the values of the Declaration of Independence and the Constitution, we have to get a little bit out of our own way and go to the empirical argument. We often we as a community often get very passionate about the ideas and the philosophical basis, as indeed we should. But improvements are made because people see and understand with an open mind, this works better than that. And this happens to be a topic where there is quite a bit of evidence. So if you do look at all the evidence and you think that public banking thing is a really bad idea, then great. But I just urge you with an open mind to do that, right? Don't dismiss it based on buzzwords or on, wonderful as this presentation was, it was only an hour or two, on a topic that, as we've also seen from the questions, relates to some other much bigger issues as well. And we haven't even had time to touch on them as much as I would like to have done. I could stand up here until 3 in the morning going on about the monetary system, but I won't. So thank you all for that, and thanks again for coming in.
Thank you, good evening.